So heck, I should go away more often. I go away and mortgage rates plummet. Now, some of you guys down in the comment section gave me a hard time when I referenced the word plummet. And I'm going to address that in a minute. But over here, here's what you're seeing, what's going on with the mortgage rates. It took a little bit of an uptick yesterday. That was based on some retail sales numbers that came in a little stronger than expected. But let's get over to the economic data and see what's going on. But first thing I want to go over is, why is the Federal Reserve raising rates? And the reason why I want you guys to understand this is, I want to show you how the data that's coming in is actually helping the case that the Federal Reserve should be done raising rates and actually should maybe be looking to start to pivot and reduce rates. So let's get over to this. Why has the Federal Reserve been raising rates? Well, let's look through here. When the economy booms, is red hot, distortions like inflation and asset bubbles can get out of hand, threatening economic stability. That's when the Federal Reserve steps in and raises rates to help cool down the economy. What they're trying to cool down is the employment numbers and also the prices of things. So let's get over to the news that we had today, or this week, that actually is playing right into the role of basically what the Federal Reserve's looking at. They want these numbers to start to really come down. So to do that, we go to the economic calendar, and basically we have an agenda full of activities that took place this week, and I would say 99% of them are right in the wheelhouse of the Federal Reserve of what they're expecting. So let's go through this. Core CPI. The CPI number is basically, think of the C on the beginning of that. CPI is the consumer inflation. Okay, and then we had that on Tuesday. On Wednesday, we had the PPI. The P section of that is for producers. And then we start looking at the jobs numbers. So let's put all this in the context for the week. The first thing we had is core CPI, consumer inflation. Last reading was 0.3. It was up 0.3. Expectations from the economists was to come in at 0.3. It came in at 0.2. CPI month over month. Previous reading was 0.4. It came in at 0. Okay, CPI year over year, it was at 3.7, coming in at 3.2. So all the CPI, all the inflation numbers for me and you are actually coming in quite better than what the economists are expecting. And that's good news for the Fed, and that's good news for interest rates. Then the next thing we start seeing is core retail sales. Now, this is the thing that kind of screwed up things a little bit. Last reading was 0.8. They expected it to drop all the way down into the negatives, negative 0.2. It actually came in at positive 0.1. But we went from 0.8 to 0.1, a big drop. Okay, when we're talking tenths, I mean, some of these numbers are really dissected to the tenths or the hundredths. So that's why I really, kind of get excited about some of these numbers. Then the PPI number, last reading was 0.4. It was expected to come in at 0.1. It came in at a negative 0.5. So that's on the producer side. They're seeing less and less pressure on prices. So what the expectations are is they're not getting as much rises in prices. So they're going to start passing those savings on to the consumers, dropping prices even more. Will it happen? We will only see. And then we had crude oil inventories. Now, yesterday, here's what we had. We had initial jobless claims. Now, this is another area that the Federal Reserve really pays attention to. Last time it came in, initial jobless claims, how many people lost their jobs? 218,000. It was expected to go to 220. It actually increased all the way to 231,000. That was the Federal Reserve is like, hey, we're starting to, make a difference in the economy. So that's what we've seen so far this week. That's why you're seeing mortgage rates, and I'll say plummet. And here's why I say plummet. If you go over to the Dow Jones, now a lot of you guys can kind of take this into account. The Dow Jones right now is at 35,000. Okay, so mortgage rates over the last week or over the last week and a half have dropped over 7.36%. Okay, you might say, okay, Dan, whoop-de-doo. Well, here's the numbers. It went from 8.04 to 7.45. Okay, the difference in that drop is a 7.36%. And I'll validate my numbers right through here. We got 8.03 was a 52-week high. Right now we're at 7.45. Okay, so we have a 7.36% drop in mortgage rates. Okay, so now let's put this in a little context. If we have a Dow Jones at 35,000, let's put in the chat GPT. Let's see how this works. If the Dow Jones is at 35,000 and drops 7.36%, how much would that mean in Dow Jones points? So that means the Dow Jones would drop 2,500 points. 2,500 points. That's what the equivalent is. So when I come out there and say mortgage rates plummeted, well, if the Dow Jones dropped 2,500 points, I think you'd agree with me that it plummeted. So that's why I basically put the verbiage out there that mortgage rates did plummet, folks. Okay, so now you know where mortgage rates are. I'll go over that in one more second again to make sure you guys realize that. With the economic calendar, the economic news that took place this week, that's right in the wheelhouse of the Federal Reserve, and how much of a drop this is, and how it equates out to different parts of the economy that you might be more familiar with. So that's basically what's going on right now. The Federal Reserve has been raising rates higher and higher and higher to offset inflation, and what their job is right now is what they've done over the last year and a half is actually starting to work, and it's in the economic numbers. Okay, so that's what we're seeing right now in the markets. These are the top 6 products people use when they're buying their first house. It goes from a 30-year fix to a 15-year fix, jumbo rates, FHA rates, and VA rates. So if you're out there and you're like, hey Dan, I'd love to see what I would qualify for. Maybe you're thinking of buying that first house or maybe that first investment property. We'd love to help you. And at the end of this video, I'll give you my information. But based on today's economic news, what in the world is going to go on with mortgage rates today? So to find that out, we go over to my charts right here. I subscribe to this service. If you're a mortgage broker out there and you'd like to use this service, I think I have it still down in the description below. You can actually subscribe to this service. But if you're out there and you're a realtor, you're a consumer, and you want to find out what's going on daily, such as these items, please just follow me on a daily basis. But what we follow here on the mortgage channel is right through here. What's going on with mortgage rates? Well, we follow the MBS market, and this is the mortgage-backed security bond that trades on Wall Street. What we follow is this number right here. This is what's going on in the price of a bond. Okay, the number right here over here, if you squint, you can see it's up 44 points. Okay, all you need to know is if this number on a bond, if the bond price is going up, well, the rates are coming down. Here's how it works. Let me put it in its simplest forms. Here's Bonds 101 on how you can equate the price and the yield. Okay, so let's say, for example, I have a bond today and it matures next year. And the price of that bond, when I hand it back as my investment, when I give it back to you or trade it back in, I'm going to get $100 back. Okay, so the maturity value is $100. So let's say today, I'm going to give you $50 for that, a low price. Okay, so I give you $50 today. Next year, I turn it in and you give me $100 back. What is my rate of return? What's my yield? How much did I gain on that? I doubled my money. I gave you $50 today. I got $100 back next year. Okay, so let's drive up that price to make this make sense. Okay, so let's say today I give you $100, just to make it simple. Give you $100. Next year, I give you my coupon back, and you give me my $100 back. And you're like, Dan, why would you do that? You make no money. Exactly. My rate of return, my yield on that investment is 0. So do you see how at $50, when I paid you a lower price, my yield was much higher than if I paid a higher price? So we love when this number is going up because it's driving down the rates or the rate of returns. So why we follow this is the mortgage-backed security, the bond yield on this, the yield on this thing is the biggest component or the biggest part of your interest rate on your mortgage. So that's why we follow this. So a 42 move in this is probably going to equate out to maybe a 0.1 drop in rates today, but every little bit is helping us make housing a little more affordable. So if you're out there and you're like, hey, Dan, can I qualify maybe in this market to buy my first house? I just hate renting. Or, you might just be in the mood that maybe you got a pay raise and you're like, hey, I'm in this area for a long time. I know I'm going to settle here. I got some kids. I want them in schools. I just want to buy a house just for me and my family to live in and live comfortably for the next 15, 20 years. Who knows? We would love to help you. So how do you reach out to us? Who are we? What do we do? So my name is Dan Frio. I'm a licensed mortgage advisor throughout the entire country. I work at a federal bank here in Illinois. What that means for you guys is no matter where you live in the country, I can help you. I'm licensed in all 50 states as well as Puerto Rico. However, something unique. We are one of the country's largest mortgage brokers as well. We're set up with over 70 different lenders out there. They're some of the country's largest lenders. So instead of you having to call me and then call this other place and then Chase and then Wells Fargo, then Rocket Mortgage and all these other places, we can do all this for you. So what we do is we put in all your information. We work with all these lenders throughout the entire country to make sure we find you the best rate out there and put you into the best program. So how do you get in touch with us? Well, there's several different ways. One is you can click the Apply Now button right up through there. It's going to ask you a series of questions. Based on the answers to those questions, we're going to associate you with a mortgage advisor on my team that specializes in exactly what you're looking for. Or if you're like, hey, Dan, can I call or can I email somebody? Oh, absolutely. Scroll down to the bottom of the website and you're going to find a bunch of tools there, mortgage calculators and such. Then you're going to come right down to here. Feel free to give us a call at 844-775-5626, or you can email me directly at dan@rateupdate.com. Thanks so much for watching, guys. God bless. I hope you find value in my channel, and now you maybe understand a little bit more how mortgage rates work and basically the economics behind the scenes on why we follow the bond markets and the economic data on a daily basis for you guys. Thanks so much for watching. See you tomorrow. Bye-bye.